We looked at the top questions asked on Google about the 2025 real estate market, and today I'm answering them. Will it crash? Will mortgage rates finally give us a break? And should you buy a house now or should you wait for a recession? Well, sit down and grab your popcorn. It's about to get real. Estate. See what I did there? Okay, let's get to it. First, the biggest question is, will the housing market crash in 2025? Now, before we can answer that question, let's first establish what actually constitutes a real estate market crash. It involves a rapid and significant decline in property values. The factors that typically contribute to such a downturn are an economic recession. A broad economic downturn can reduce consumer confidence and spending power, leading to decreased demand for housing. Two, high unemployment rates. Job losses can result in increased mortgage defaults and foreclosures, adding to the housing supply and driving down prices. Plus, if someone doesn't have a job, they're typically not applying for a mortgage and buying a house. Three, rising interest rates. Higher mortgage rates make borrowing more expensive, reducing affordability and dampening buyer demand. Overvaluation. When home prices significantly exceed their intrinsic value, a correction becomes more likely. And excess housing supply. An oversupply of homes can lead to decreased prices as sellers compete for buyers. Now, knowing this, let's look at our current economic circumstances to see how they stack up against these signals. So, are we headed towards a recession? No. Considering the fact a recession requires a drop in GDP for 2 consecutive quarters, a recession does not look likely. We've had GDP growth every quarter since the third quarter of 2022. Do we have high unemployment rates? No. The rate of unemployment has gone up this year, and we saw a little increase for November, but we're still only at 4.2% unemployment. And that is not a threatening number when you look at historic unemployment numbers. Do we have rising interest rates? No. Almost every major real estate publication is predicting some sort of a decrease in mortgage rates for 2025. In addition, many experts predict the federal funds rate will decrease again in 2025, but they are very careful to predict how many federal funds rate cuts there will actually be. And I think they're hesitant to make a prediction for substantial rate reductions for 2025 because at this time last year, almost everyone anticipated multiple rate cuts and said they would start at the beginning of 24. Well, we didn't get our first rate cut until September, and mortgage rates this year were a lot higher than everybody predicted. And do we have an overvaluation of real estate? Well, it kind of depends on where you are. According to the housing forecast from Realtor.com, there's only one market in the 100 top markets of the United States that is expected to have negative price growth in 2025. And that market is Albuquerque, New Mexico. Sorry, Albuquerque. And CoreLogic is a little more negative with their predictions. Their top 5 markets at the risk of annual price declines are Provo-Orem, Utah, Salt Lake City, Utah, Atlanta, Sandy Springs, Roswell, Georgia, Tucson, Arizona, and Palm Bay, Melbourne, Titusville, Florida. But ultimately, overvaluation isn't leading to a crash. Limited housing inventory remains a critical factor. With a nationwide housing shortage of nearly 4 million units, and that's according to Freddie Mac, any downward pressure on prices from overvaluation is mitigated by this lack of supply. And unlike the 2008 housing bubble, lending standards today are stricter. Buyers typically have higher credit scores and more substantial down payments, making the market less vulnerable to widespread foreclosures. And demographics are fueling demand, particularly from millennials, and they're entering their peak home buying years. And this sustained demand helps to maintain property values even in potentially overvalued markets. And if you want to look at what the experts are saying about price growth, well, Realtor.com is forecasting home price growth of 3.7%, Zillow's predicting 2.6%, Redfin is the most optimistic at 4%, and Fannie Mae is at 3.6%. Do we have an excess housing supply? No. Freddie Mac's recent housing supply spotlight estimates a national housing shortage of 3.7 million units as of Q3 2024. So out of the 5 conditions that we would consider to determine a possible market crash, 4 of them are a no, and 1 of them is a not really. Therefore, to answer the question, will the housing market crash in 2025? Well, your answer is no. Next question. Will 2025 be a good year to buy a home? Well, Realtor.com did a great job of answering that question in their 2025 housing forecast. Their takeaway was that 2025 could be a decent year for buyers, especially compared to the frenzied markets of recent years. But let's set some expectations. Mortgage rates are expected to hover around 6.5% for the year. Rates might dip occasionally, offering buyers brief windows of opportunity, but it is wise to budget for the mid 6% range. On the bright side, the housing market in 2025 is shaping up to be the most buyer-friendly we've seen since 2016. Inventory levels are expected to improve, with supply reaching around 4.1 months of inventory. And now, when you consider a balanced market is considered one that has 4 to 6 months of inventory, then we're looking at crossing into balanced market territory. And what that means for buyers is less competition, fewer bidding wars, and more price reductions. Nearly 20% of listings are projected to have them. But here's the kicker. If you are wondering whether to buy now or wait, remember this: time in the market beats timing the market. Real estate builds wealth over the long term through appreciation and equity growth, even in less than perfect market conditions. Getting in the game as soon as you're financially ready and able often outweighs the risks of waiting for that perfect moment. So, to answer the question, is 2025 a good year to buy? Well, if you are prepared for the financial commitment, it is shaping up to be better than the past few years, with opportunities to negotiate and take advantage of a calmer market. Now for the next question. Are mortgage rates expected to go down in 2025? Well, I answered this briefly in the market crash question, and the short answer is yes, but don't expect a free fall. According to Realtor.com, mortgage rates are projected to average around 6.5% by the end of 2025, a slight improvement compared to the higher peaks we saw in 2023 and early 2024. And this downward trend is driven by cooling inflation, which allows the Federal Reserve to ease up on its aggressive rate hikes. However, rates will remain above the 3 to 4% levels that we saw during the pandemic years, so don't expect those rates to return anytime soon. Fannie Mae forecasts a gradual decline as well, predicting rates will fall to the mid 6% range throughout 2025 as inflation stabilizes and the economy settles into a steadier rhythm. However, they emphasize that rates are unlikely to dip significantly lower unless the economy faces a major downturn or recession, something most experts currently do not foresee. Now, Zillow predicts rates will be lower at the end of 2025 than the start. Redfin thinks they'll average around 6.8%. The Mortgage Bankers Association thinks they'll start at 6.5% in Q1 and decrease to 6.4% by the end of the year. And here's why rates will not plummet. We have sticky inflation. While inflation is cooling, it's still above the Fed's target of 2%, which means the central bank will tread carefully before making any drastic cuts. They don't want to overstimulate the economy and push inflation up even more. We have a strong job market. Low unemployment and steady wage growth continue to buoy consumer confidence and housing demand, limiting the Fed's incentive to cut rates quickly. And that said, 2025 could offer some relief for buyers compared to the highs of recent years. A slight drop in rates could make monthly payments more manageable, but the key takeaway is this: mortgage rates will likely stabilize, not plummet. So if you are waiting for rates to fall dramatically, consider this. Even small improvements can impact affordability over time. As we've said before, waiting for that perfect rate might mean missing out on opportunities to start building equity sooner than later. Which leads to the next question. Will the housing market improve in 2025? The housing market in 2025 is expected to show modest improvement, particularly for buyers, though challenges will persist. According to Realtor.com, housing inventory is projected to increase by about 11.7%, reaching levels we have not seen since before the pandemic. And this means buyers will have more options and fewer bidding wars, creating a less competitive and more buyer-friendly environment. While not a full-on buyer's market, it is certainly a step closer to a balanced one. Home price growth is expected to slow down but remain positive. CoreLogic predicts home prices will rise around 2.4% nationally on a year-over-year basis to October of 2025. All the sources we've cited for this episode provide a much more sustainable pace compared to the double-digit increases seen during the pandemic. This moderation is good news for buyers as it reduces the risk of overpaying while still offering the benefits of long-term appreciation. And here's why the market's improving. We have more homes on the market. New construction activity is gradually increasing, and sellers holding off due to high mortgage rates may begin to list their homes as rates stabilize, slow price growth. Moderating home prices will give buyers a little breathing room while still ensuring the market remains stable. Reduced competition. The frenzied bidding wars of 2020 to 2022 are fading as buyer demand evens out and supply increases. So will the housing market improve? For buyers, yes. 2025 will likely feel calmer with more homes to choose from and slower price increases. For sellers, it's still a strong market, but the days of skyrocketing prices and bidding wars are fading. Overall, the market will inch towards balance, making it a more manageable and predictable year for both sides. As always, it's about perspective. And I feel like in 2024, a lot of people just hit the brakes. And we had so much volatility, no one knew what the best move was. So they just froze in a bit of an analysis paralysis. And now, going off of the conversations I'm having with people and knowing what I know, I feel like in 2025, things are going to flatline more. And this idea of holding out for something better will fade because time will show the market to be steady and not flipping in either direction. And by the way, when I say flatline, I mean flatline with a tiny increase. But what if you still want to wait as a buyer? You wouldn't be the only one. One of the top questions around the real estate market is, should I buy a house now or should I wait for a recession? And the wait for a recession strategy might sound clever, but here's the problem. Timing the market is risky and recessions don't always lead to better housing opportunities. Let's break it down. Interest rates may not drop dramatically, while mortgage rates are expected to ease slightly in 25, hovering around that 6.5% rate. Waiting for the perfect dip could mean missing opportunities. Even a half-point drop in rates can impact affordability, but locking in a home now builds equity sooner. Home prices are still rising. Home price growth is slowing, but prices are not expected to decline. CoreLogic and Redfin project those modest increases of 2.4% to 4% nationally in 2025. And if you wait, that home you're eyeing will probably cost you more next year. And if we take CoreLogic's projected 2.4% growth and apply that to a $350,000 house, that means that in a year, that house will now be $8,400 more than it is today. Inventory is improving. Inventory is trending upward, giving buyers more choices in 2025. But demand for millennials and move-up buyers who built up a lot of equity over the last 5 years remains strong. Waiting too long could mean competing for homes as the market heats up again. And there's a cost of waiting. If you're financially ready, waiting for a recession could cost you. Consider this. You miss out on building equity now, which helps you grow long-term wealth. Home prices may rise and interest rates, while projected to stabilize, could remain high enough to erode affordability further. Market timing is unpredictable. Waiting for that perfect moment often means you're still waiting years later. And who should wait? Well, if your financial situation is not solid, meaning you're unsure about your job stability or saving for a down payment or covering mortgage costs, it may make sense to wait. But the bottom line, if you're ready to buy now or close to it, focus on your personal timeline, not the market's timeline. Remember, as we've said before, time in the market beats timing the market. Buying sooner allows you to build equity, take advantage of stabilizing mortgage rates, and lock in a home before prices start to creep up again. So while waiting for a recession might sound strategic, the reality is it's a gamble. If you can afford to buy now, don't let the fear of what might happen stop you from securing your home and your future. So if it's not prudent to wait for a recession for home prices to drop, will the housing market ever be affordable again? Which, by the way, that's another question people ask on Google. What is likely is that housing affordability will improve incrementally, but we're not returning to pre-pandemic levels anytime soon. While the immediate affordability crisis won't disappear, experts agree that the market is slowly correcting itself. New construction is gaining ground. Builders are ramping up production, especially in affordable housing segments, to meet this long-term demand. And Redfin notes that new home construction is a key driver of improved affordability, and wage growth helps. Rising incomes paired with slower home price growth will gradually make housing more accessible, though the gap remains significant in high-cost areas. While affordability remains a nationwide challenge, some regions, particularly the Midwest and parts of the South, offer more reasonable price-to-income ratios compared to coastal markets. Buyers who are flexible on location, budget wisely, and focus on long-term gains will see the most benefits as the market adjusts. And as we finish up our 2025 real estate market predictions, let's turn the crystal ball towards housing policy, because what happens in Washington doesn't stay in Washington. It trickles down into what you pay for a house in Peoria or Portland. So here's what could shake out in 2025. If you're hoping for significantly lower mortgage rates next year, let me gently lower your expectations. The economic data just does not support it. Inflation is cooling but not vanquished, and unemployment is still pretty low. For the Fed, this means no incentive to lower rates. Now, what could change that? Well, a mass wave in layoffs leading to a spike in unemployment could push the Fed to stimulate the economy with rate cuts. Think of it as the Fed's version of break the glass in case of emergency. But as of right now, that glass is staying intact. It looks like there will be more housing on the horizon. Here's the bright spot. New construction is expected to pick up in 25. Regulatory hurdles, long a thorn in the side of developers, may get slashed under changing policies. The overturning of the Chevron doctrine could play a big role here. Historically, broad laws allowed unelected officials to craft the nitty-gritty rules, which often bogged down development with red tape. With these changes, the cost and time to build could decrease, which could really increase the number of houses that hit the market in Q3 and Q4 of 2025. We could see prices go up in big cities. The return to office movement isn't just a headline, it's a housing market factor. Employers are continuing to bring workers back to the office, which means homes within a commutable distance to major metros will remain in high demand. Expect prices in these areas to keep climbing, while properties further out may see price growth level off. The hybrid work trend has reshaped where people live, but in 25, we might see a bit of a rebalancing. So there you have it. We have tackled the biggest questions people are Googling about the 2025 housing market. Will it crash? Nope. Will mortgage rates give us a break? Kinda. And should you wait for a recession? Probably not. The bottom line, the market is finally moving towards something that feels, well, normal-ish, stable-ish, predictable-ish, and that feels like a really good place to be. What do you think? Where do you think the market is headed in 25? And by the way, if we have not met yet, I'm Jennifer Shannon. I'm a realtor and broker associate with the Crest Edge Group at Keller Williams Rockwall, and we work with buyers and sellers all over the Dallas-Fort Worth Metroplex. If you're thinking about making a move in 2025, I would love to be your real estate resource of choice and earn your business. You can call or text me directly at 214-803-4444 or send an email to me at jshannon@kw.com to get started. Plus, we partner with data-driven agents in other markets across the country. So wherever you're looking to move, we've got you covered. And if you enjoyed peering into the housing crystal ball with us, don't forget to hit that like button, subscribe to this channel for more real estate insights, and check out another video, because staying informed is always the best investment. I'll see you in the next one. Bye.